Now I'd like to introduce our next session, which is going to be focusing on Latin America, and Latin America as a hotspot for foreign direct investment. And for that, I'd like to bring to the stage David Humphreys. David is the Director of Client Research for us in the Americas. He splits his time between New York and Washington, DC. He does a lot of work on issues for firms in the Americas, both in North America and Latin America. He's joined us very recently. He joined us initially from a company called Management Partners that focused on helping US governments operate more effectively. But actually prior to that, he spent 10 years with Frost & Sullivan, helping build up their Latin American business. He spent time living in Brazil, studied in Argentina, has a wealth of experience about what it takes to be successful operating in the Latin American region, and he's going to talk to us today about the outlook for Latin America and what the business opportunities are there for you here in the room. So with that, over to David.
All right, let's make sure this is working. Everybody can hear me. Well, certainly good morning to everyone, or more appropriately for the presentation today in Spanish, buenos dias, and in Portuguese, at least a few of the folks that I've seen, bom dia. It certainly is a pleasure to be here and talk about Latin America. It's very curious to hear all the speakers talk about different regions of the world and interest. And my goal is to give you a flavor of what's happening in Latin America, the goods in terms of the growth prospects, some of the challenges that one faces in terms of the business environment, having experience, as Robin mentioned, on the ground and developing businesses. I understand those challenges and understand how that changes by industry. Latin America has come quite a bit of a distance, not only since the debt-brittle times of the 1980s, but also since the times of deregulation in the 1990s. The stability in the region shown in the last 5 years, with growth averaging of 4%, really shows that it has become a resilient, resilient region, also showing its resiliency in terms of in terms of the crisis that occurred in 2008, in which the markets bounced back very quickly. That is a product of really 3 different things. Certainly the ability to be able to sell commodities like iron ore, soybean, timber to markets like here in China has benefited Latin America. But also the solid economic management policies in terms of inflation targeting monetary policies, being strong in terms of managing their debt levels, as well as opening up markets through trade diversification has really benefited Latin America. So the last component, which is an interesting component, is really kind of market-driven in terms of that 600 million people that live across Latin America becoming much more consumer-oriented. We're going to talk a little bit about that today and what that means for you. But what that means in investors, in the last year, Latin America experienced record levels, about 145 billion in foreign direct investment. And in terms of their reserves, today stand at 750 billion, which shows how those markets have come a long ways in the last 15 years. Mapping the growth perspectives over the next 5 years, you can see it is rather solid. Certainly there are some concerns in terms of appreciated currency levels that make their exports, particularly manufacturing, rather expensive. There are concerns in terms of dependency on commodities. But the markets show very level resiliency over the next 5 years. Now, I would put those in really 2 categories. The big players, as Robin mentioned, emerging markets, 7 countries, Brazil and Mexico, represent 60% of the GDP. Both of those look to experience relatively stable growth rates over the next 5 years. But those, as many of you have probably gone through, are very different markets, both in terms of their economic base as well as opportunities for companies here in China and abroad. The next level of countries that have offered high growth rates include not only the stable and very trade-diverse China, Chile, but also markets like Peru that are very rich in resources, but also have challenges both from the political and demographic side, as well as a country called Colombia that has experienced a great deal of growth, particularly in foreign direct investment. And this last year reached $7 billion, up 90% from the previous year. It is certainly a very exciting market, not only from the commodity standpoint, mining and metals, but also from a growing consumer base that has not had a lot of development because of its political and economic situation in the last 25 years. Of course, part of the success that Latin America has garnered over the last 5–10 years has come with expanded relationships with countries here in Asia. A fifth of its imports and exports are directly with Asia, and half of those come from Chinese companies. And so certainly China has become a very big player within Latin America, has grown its foreign direct investment from 1% foreign direct investment 10 years ago to 10% of the region's foreign direct investment in the last year. Most of that has occurred in areas that we have talked about, in mining, in metals, and in energy, but growingly has started to come in other areas. One great example at the end of the last year is in car manufacturing, with a plethora of manufacturers looking to establish plants in the south and northeast of Brazil, as well as Venezuela and small markets like Uruguay. So there's a great interest in Latin America, not only in terms of resource seeking, but in terms of market seeking. Now about the opportunities. And a lot of the flavor of the opportunities that you're hearing today will be about natural resources, will be about infrastructure, will be about manufacturing. But one of the interesting phenomena, and I think makes it very interesting for the folks here, is really in terms of a consumer-driven type of society. What you see here on the graph is the population of about 600 million people within Latin America. The first thing that jumps out at you, you see about half of that population, again, resides in Brazil and in Mexico. You also see sizable populations in areas like Colombia, Peru, as well as Argentina. Now the thing about these numbers, behind these numbers, is a very youth-driven society. Most folks, an example of Brazil, the average median age is under 30, with 30% of those 14 are 14 and under. On the other end, we have a growing level of urbanization that is occurring within the region, growing to about 80% of folks living in urban areas. When you go to a place like Brazil or even Chile, those numbers go up to 85 to 90%. What that means is not only a driven consumer society from the young population, but also in terms of infrastructure needs that they're going to have today and moving forward. Now, the other component I didn't talk about here, the bottom of that pyramid, about 175 million people in Latin America still are below the poverty rate. But there is some good news in that. Over the last 5 years, the region has experienced tremendous growth and impact, particularly on these segments of the market. What you see here, referring to the Gini index, which measures income inequality, has dropped within the region. Not only has this benefited from the economic growth, but also conditional transfer programs like the Bolsa Familia in Brazil, which have raised a good level of people out of poverty and into societies and making the next round of consumers. In Brazil alone, over the last 8 years, 1/4 of the people have moved upwards into the middle upper class. 13 million people in the last 2 years have moved in the middle class in Brazil. What that means is, A, markets like Brazil are experiencing nearly 100% penetration rate in cell phone usage. Nearly 550 million consumers are using that. You also see great level of demand in the automotive sector, with both Colombia and Brazil showing double-digit growth in the last 2 years. Now, the impact of the growth in Latin America is shown a little bit by this figure, which compares income levels and consumption across different markets. What you see is, again, the tremendous growth coming from Brazil, going from about $3,000 in 2005 to double that amount by 2010 to nearly about $9,000 in 2015. That has a great impact in their ability to acquire those types of goods and services that many of you are already selling within Brazil and across Latin America. Now, there is some concern of this, but also debt levels in households are increasing, particularly within Brazil. Those have risen, household debt to income has risen 40% in the last 5 years. But given that it's really starting off a very small base, which most people have not had in private history. It isn't necessarily a concern, but it is something to look out for. Of course, Latin America has benefited in terms of trade and opening. NAFTA is one of the first, where now you have about $1 trillion worth of trade that goes across those three markets. Other markets like Mercosur have really helped in terms of trade. Inter-region trade has increased ninefold in the last 2 decades, particularly within markets like Brazil, Chile, and Argentina. But increasingly in the last 10 years, you see a lot more trade happening through agreements, bilaterals, and others with countries here in Asia. And I think a prime example of that impact and that paradigm shift of companies in Latin America looking elsewhere to be able to sell their services and consumers being open to products coming from markets like China is the case in Chile. Chile, 10% of their exports and less than 20% go to the US. On the flip side, 20% of exports from Chile, their top trading partner is China. While at the same level, 15% of their imports come from China. This is an example of a paradigm shift and lack of dependence on one particular market that Latin America has gone through. I think we could probably spend the whole day talking about why Brazil is much more than football, though I guess knowing the typical Brazilian, if you ask them, that's probably the most important thing, particularly with the World Cup coming up in 2014. But from soybean in the center west of the country, the timber across the country, with retail and cell phone manufacturing happening in Amazonas, Brazil is a diverse region in terms of its capabilities and economic base. I do want to highlight a couple areas I think of great interest for you. The first is on the energy side. Many of you know the interest in terms of developing the pre-salt layers, oil that are off the coast of Brazil. The government has earmarked 2/3 of $600 billion of investment in developing both upstream and downstream capabilities, many of which the country does not have, to develop nearly, potentially 80 billion barrels worth of reserves that are off that coast in deep sea in Brazil. That is a big area of investment and interest for you. The other areas are in terms of automotives, manufacturers. I mentioned before, a flurry of investment announcements, particularly from Chinese companies, came at the end of the year, developing plants and capabilities within the north and south of Brazil. Those are certainly good markets, and that is certainly looking for very affordable and quality-driven type of products. There is a catch to that. The Brazilian market, 80% of what they sell today in automotive is flex fuel, meaning it has the capability of using sugarcane ethanol as well as gasoline, and in many cases natural gas. By 2020, 75% of the installed base of cars in Brazil will have flex fuel capabilities. And this is something to consider when you look at that market as a growth market, that it has unique requirements that consumers are looking for. The last mention that I would say is in terms of the two events in 2014 and 2016, both in the World Cup and the Olympics. There was a lot of earmarked infrastructure projects from transport to logistics, our stadiums that will come online in the next 5 years. My guess is those will occur in a way that try to catch up for those events. And the question will become if Brazil really benefits from these events or it becomes a long-term burden, which has happened in other emerging markets like South Africa. Moving on to Mexico. Mexico is also another important market here, but very different from Brazil. 82% of its exports are manufacturing. Many of those come from the maquiladoras, the assembly plants that are located in the north of Mexico that employ about 1.3 million people. Those are big areas and have become increasingly important for multinationals that are looking for both the ability to ramp up investments in manufacturing just in time to reach consumers, particularly in the U.S. market, and that local access in terms of local, low-cost transportation to be able to reach the U.S. market. Now, Mexico also has an energy side. They recently announced a new energy plan, and we will see if that happens. But there's a couple interesting things that came from that I would like to bring to your attention. The first thing is in terms of opening up its oil sector and expectations to develop its own deep sea capabilities within the Gulf of Mexico. Unfortunately, the oil operator Pemex has had a lot of challenges, particularly in technical knowledge, to be able to get in there and extract those reserves. And there are opportunities for partnering and showing that technical knowledge to be able to extract that. The second is in terms of development of shale gas, particularly in the north part of Mexico. Mexico, I believe, has the 4th largest reserves in shale gas, and they're looking to be able to take advantage of that. It's a greenfield area that want to develop a pipeline. It's part of energy security, and it'll be interesting to see how that occurs. The last point that I would mention in terms of Mexico has to do with the political cycle. They're in the midst of heading toward the presidential election. Mexico, more than any other Latin American country, is notorious for its political cycle, before and after, and the impact on the economy. This is something to pay attention to, particularly if you're looking towards Mexico in the next year or so. Certainly very pleased to talk about this next country, Colombia, as part of our CIV. It's the next group of emerging markets that we really see as growth engines. Because this is a market that up until the last 5 to 10 years has been left relatively undeveloped. Part of that had to do with the political and economic challenges they had around the drug trade that occurred within Colombia. It really has become a driving force. Their foreign direct investment has increased nearly twofold in the last year, particularly in markets like metals and mining and energy. I know in Colombia they're looking to ramp up their oil capacity up to about 1 million barrels per day, and they're in the process of auctioning off a lot of mining rights. And certainly because of the Colombia Free Trade Agreement with the U.S., there was a lot of interest in Colombia to be able to access those markets. But Colombia is also a lot more than just those resource capabilities that they offer. It's about a 50 million population, again, that has been very underdeveloped, but is very interested in becoming much more apt consumers, have a lot more resources to be able to acquire goods and services. And I think that the success of Chinese car companies is a good example of the openness of Colombia to be able to access an affordable, quality product. The last one, which is a curious case, is Peru. Peru has experienced more growth in the last 2 to 3 years than any Latin American market. And our expectations is for that growth to continue. But there are some challenges in Peru that you find in the center countries of Latin America that are very unique in terms of its indigenous population, in terms of the involvement from the government, that makes business there very challenging. Now, from a market standpoint, 45% of its exports are in 2 products, gold and copper. And that is something that they continue to be able to offer in the immediate term opportunities. There's also great interest in developing oil and other energy sources within the country, but it is in something increasingly the state-owned company, Peru, is becoming very, very involved in. And it's something to be aware of if you look at anything having to do with energy within the Peruvian market. This slide wraps up perspective in terms of foreign direct investment within Latin America. As you can see, Brazil has been the primary focus. Certainly has occurred, particularly for organizations coming from China within the areas of energy and metals and mining. In a place like Mexico, $6 billion of that investment really come within manufacturing, particularly focused on food, ramping up that just-in-time capability. Within markets like Colombia and elsewhere, those have started to come in other areas, particularly within manufacturing, automotive. And the bottom end are markets that are very problematic. Robin mentioned earlier about the nationalization of YPF in Argentina. Those countries, for good or for bad, have gone through a lot of challenges in how to manage and provide both growth to the country as well as equality to its population. And that has affected investors within Latin America. Now the challenges. There's certainly a lot of challenges within Latin America in dealing with business. One of them are inefficiencies, which it looks like we still have here. There we go. As you see in this chart, Latin America's growth, while it has been good compared to other emerging markets, has been a little bit less, and particularly focused moving forward. Part of that has to do with depreciation of currencies, the expense nature of their manufacturing products abroad, and overdependence, particularly on commodities. Compared to 20 years ago, 39%, nearly 40% Latin American market. I don't think anybody who has dealt with Latin America is surprised by these results, having opened up offices and served as a legal representative within Brazil. The fact that Latin America still ranks below average in terms of rankings in business environment is no surprise. It is challenging in terms of opening an operation. It is challenging in moving regulations. It is challenging in terms of changing tax rates as well as requirements. In terms of local content needs. But within those averages, you have 2 or 3 different types of cases. First is the case of Chile that typically ranks in the top 15 countries in the world in business environment. It has a very clear and long history of fair regulatory policies, respecting investment rights, good infrastructure that supports the development. On the other side of the coin, you have markets like Argentina and Venezuela that seem to be going backwards within this space. No investment in terms of infrastructure, history of nationalization, and challenging environments for individuals like yourselves. Now, a market that is certainly improving in this is Colombia, and it's one of the few markets that have had some success in the political environment and continuing to push forward regulations during times when economic growth is very positive, which has not really happened with other Latin American markets. Speaking of the political stability and effectiveness, I think this is a big issue for all of you that have experienced Latin American investments. Markets like Brazil and Mexico have had challenges in political discord, which have kept them from moving forward with market-driven reforms that are much needed, and have also had challenges within markets like Peru and Bolivia with indigenous populations, environment requirements, and certainly political discord. No example is better than the recent investment in the Minas Conga gold and copper mine in Peru. This has been a major issue. It's the largest single investment that has gone into Peru and has been shut down because of questions both about the environment as well as the implementation from the population there. That is something that is going to continue and have to be hurdles thought of going into Latin America and how those are going to be resolved. I'm going to skip through here a little bit on the education and move specifically into infrastructure. It has a little bit of animation, so bear with me here. Infrastructure is a major issue within Latin America. Most countries only invest about 2% of GDP. Chile is the exception, about 6%. We expect those numbers within Brazil to increase at 3 to 4%. But there are major challenges in infrastructure. Brazil has 1.6 million kilometers of roads, 250,000 of which are paved. When 60% of cargo is delivered via roads, and only 20% via railways, that means it's very challenging both in time as well as cost to move your goods. Imagine if you're a soybean producer in the center of the country. Moving that to an export market is very, very challenging and costly. This is something that the markets are looking to catch up in terms of infrastructure. There are a lot of great plans. We need to see them put into place before they actually can be deemed effective. These are some other issues that Latin American markets deal with. Some, like low savings rate, are hard to change and will take time. The political environment is a big unknown. But innovation is something that has already occurred within Latin America. You see one of the biggest consumers of sugar-based ethanol in the world, and their technology is something that is being exported to many places in the world. You see robust development of IT services in countries like Uruguay and Argentina and Brazil. And so there is a capacity for innovation with Latin America. And that is one of the areas that the governments are looking to close that gap and eliminate fears of deindustrialization. But that is something that will take a little bit of time, and I'm sure will be part of your conversations moving forward. Thank you very much. I look forward to taking a lot of your questions, and specifically about the different markets you're interested in now. Looks like we have a question there.
My name is Zhao. I'm from Boston Group. My question is, we know that Mexico is the place for attracting the U.S. manufacturing to be an export place for U.S. market, for North American market.
Mm-hmm.
Now China is, during these years, have becoming the challenger of Mexico. So what's your opinion in the next 5 or 10 years, the place, where would the investment from U.S. go? More to Mexico or still more to China?
Well, that certainly is a big question here, and I certainly don't have all the answers, particularly from the China component. But from the Mexican standpoint, there are two things that really attract U.S. investors about that. A is the proximity, and B is the just-in-time capabilities. To be able to ramp up very quickly in manufacturing and slow those down within a short period of time. Even though the U.S. market is in a small but growth stage right now, that is something U.S. manufacturers value more than anything else. And the proximity of the border, the fact the trucking issue has been eliminated, again lowering the cost and time to be able to get the product to market, is something that has allowed manufacturers to invest, and I think you will see more of within Mexico. Now, it has its limitations, both in terms of space, in terms of skilled workforce to be able to manage those type of maquiladoras, the assembly plants located along the north. And I would say that the other factor is certainly the violence that Mexico is experiencing. That might be a factor to watch moving forward. So we have one last question. Get the time's up here, but maybe we have one last. Right here.
Considering the relevance of Venezuela and Argentina, for example, as commodity exporters, particularly appealing for China's potential investors, do you have difficulties in producing forecasts for those two countries?
I think anybody that has worked with Latin America has had challenges in producing credible forecasts and understanding where it is today and where it may be heading in the future. Venezuela is the case with the upcoming presidential elections, but you don't necessarily know what's going to happen. And that's probably the most unpredictable market, both in terms of local market demand as well as exports. Argentina is one that you see, for good or for bad, that their growth path and their economic model is something that is not going to change in the next year or two. I think forecasting for that market may be a little bit simpler, problematic in terms of investments, but that's something that's rather transparent from our end. Venezuela is a bit of an unknown and will depend greatly on how the election turns out. Thank you again. Look forward to talking to people later on today.